Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 295 and we'll talk about some long-term charts of Nifty and how the outlook is looking. There is a lot of short-term noise that is there in the market, a lot of short-term worry looking at global trends also, but if you look at the long-term chart of Nifty, we are quite solidly placed. So we'll discuss and see those charts and try to get some confidence from there. But first, to look at the market. So market again, PSU banks taking a lead, up almost 2% for the day. Energy stocks, IT, metal, public sector enterprise also gaining ground. Some sell-off in private banking, but that was all the weakness that was there. The market remained iffy with Nifty closing only 0.3% up, and the internals of the market was not as strong as well. As I said yesterday also, Diwali season is on and the volume seems to be drying up. People are getting ready for the festival and there is lesser interest in the market right now. The fall in the INR, USD INR also reversed quite a bit today. So it does seem like status quo for now. Nifty next 50 however gained a lot at plus 0.97%. Purely on back of certain Adani stocks. CNX 200, CNX 500, CNX and Nifty 50 remained at plus 0.3%. Mid and small cap index were a bit flat or slightly negative today. In line with the Nifty next 50, weekend investing portfolios, MINNF 10 gained 1.1%. And there were several others between 0.5% and 0.25%, and others which were more focused on small caps and mid caps did not make any gain whatsoever. So pretty much in line. Heatmap for the day, HDFC Bank down slightly. Asian Paints after its result was below expectations, down 2.2%. Adani Enterprise up, NTPC up, Power Grid up, Nestle up, ITC, Levers, ONGC, Coal India all up about 1%. And we had IndusInd Bank losing nearly 5%. Small contribution to Nifty, but nevertheless a bigger fall. And Ultrasemco also down 1.5%. Other than that, Infosys and TCS remained reasonably robust at plus 1% for the day. In terms of top gainers in the top 500 stocks, Sharda Crop up 8%, Vinati Organics up 6.5%, Jamna Auto up 6%, UPL and Deepak Fertilizer up nearly 5.5%. In terms of losers, Delivery losing a big one, minus 16%. I think we are very close to its low now since the IPO, and the guidance for lower earnings has been given, so that has marred a lot of the outlook for the stock. Schaeffler India also down 7.5%. We hold this in one of the portfolios, down 7.5%. We'll see if we rebalance out of it end of the week based on whatever is the pricing then. PB Fintech continues to lose 6%, down more at about 400 rupees. KNR Construct and AU Small Finance also losing about 5 to 5.5%. So pretty weak for some of the counters out there. Some counters are looking a bit tired, but as we said, we are very near that again critical resistance in the Nifty, and looking for global tailwinds for us to take us through. Japanese investors are always in the limelight because the yen is continuously falling. The USD yen has now come to 150 from about 110 less than a year back. Just imagine 40% odd currency depreciation within a year for a large economy like Japan. 40% on Indian rupee at 80 rupees would mean going from 80 to 112. I mean, these are big changes and it impacts the investors and the markets in a big way. Japanese equity markets have not done much in the last 20 odd years. You can see here, this is probably 24 years, not 20 years, but since this chart is there since 2000, we've got maybe over 22 years, about a 32% gain in the equity market. So nothing really spectacular. The CAGR will be very low single digits. But just look at the blue line. Where is the blue line going? Blue line is going from 0 to 749%. What is this blue line? The blue line is the gold price in local currency. So if a equity portfolio, even if hedged with 10, 20, 30, 40% hedged with gold, you can see what that portfolio would have done to that investor. So while the equity markets are simmering, they are not doing much, and this currency is collapsing, the only way to save yourself from the collapsing currency is to have a non-local currency based asset, and which is gold, which is international asset, having no counterparty risk. So I have always maintained that you must have gold in your portfolio. Each of the economies that we've studied in the past, whether it was Turkey, whether it was Japan, whether it is UK right now, whenever there has been economy troubles, the currency will slide, and this is the only asset that can really provide you with that insurance and that hedge in your portfolio. So you must talk to your financial advisor and see if you can incorporate some gold in your portfolio. Hong Kong investors are no better off. Hong Kong investors, Hang Seng index is at 16,280. This is the same index level which was there in 2009, and rather it is the same index level which was achieved in 1998 also, 1997 rather. So just imagine 25 years of nil performance on an index. It is unimaginable actually from an Indian contextual point of view. We cannot imagine our index to stay flat or to have no returns over this period. So if index has gone sort of dull and non-performing, the stock picking and the strategy becomes even more important. In India, the advantage is that you can blindly buy the Nifty and we get 10-12% return. At least that has been happening so far. What happens when market matures and starts to behave like a matured market like this? The index investors will have a tough time at that point. So you need to have an index plus strategy. Like for instance, in India top 10 strategy is there, which is of Indian index constituents, but it is actively picking 10 stocks and trying to make the best of the index by losing the laggards on the index, so on and so forth. So what I'm trying to say is that Indian index investing has been very successful in the US and in India, but not so successful in so many other markets. So there is no one who can really say that whether in the next 20 years index investing will do well or not. I don't know. Nobody can really say. I'm sure Hong Kong investors in 1998 were not thinking that 25 years hence we will be sitting at the same level. So you never know what will happen. You have to keep your eggs in all baskets. You have to keep your assets diversified, because markets are a very uncertain animal, just like our own life is, but we don't want to recognize that. So as I said, we want to see a very long-term view on the Indian market. This is the Indian market chart of the last 20 years. And my problem is that, what is the problem here? I see no problem here. The market is growing very well. There are only 2 or 3 phases of major hiccups that came. One was 2008, one was 2015-16, demonetization happened here, and then one of course was the COVID crash. Maybe we'll have some crash someday, but the trajectory is up. The trajectory is very much up. If you have 3 to 5 year view, you take any point on this chart and sip for 3 to 5 years, you will come out winner. Any point on this chart. So if your underlying strategy is at least doing what benchmark returns are doing, and you are sipping and you have a 3 to 5 year runway, I don't see how you can lose until something very drastic changes in the Indian economy, which at least today one cannot expect to happen. So nothing to worry. I mean, there's a lot of worry in the market about certain sectors, but look at where the market is standing. The entire world is standing at 52-week low, and we are standing at 52-week high. What is that telling you? It is telling you the inherent strength, at least as of as of today, the way the earnings is there, the way the foreign investors are looking at India, the way the domestic investors are investing in India, the index is telling you a story. The index is telling you that India is relatively very, very strong versus other markets. It may change, yes, it can change, but as of now, that signal is not there. So nothing to worry from that perspective, in my view. Another insight that was shared today was the Life Insurance Corporation of India, which has a slogan "Jeevan ke baad hi" and "Jeevan ke baad bhi." So I think this chart is very, very discouraging chart for me. A lot of people, especially first timers, those who had never experienced the market, opened demat accounts because this IPO was coming, and they put their life savings into this IPO because this company is associated with, extreme trust and government backing. But just look what the merchant bankers have done to the retail investors. They have priced the IPO in such a way, and the IPO opened much higher, and the loss in the last few months has been equivalent to a Nestle or a Wipro. That kind of a 2 lakh crore kind of a loss has happened in the last 6 months, less than 6 months actually. So always think twice before you invest in IPOs, only unless you understand the company, the earnings, the potential, only then you invest in the IPO, just not because it is a big name or there is a rush to buy that. And just see anybody who has bought the IPO, anybody who bought post the IPO, they're all stuck now. They're all stuck in a big way. So much money has been lost for no reason. I mean, if you can do some trend-based analysis, at least wait for some bottoming out process. What is the fun of deploying your hard-earned money and then losing it all away? So IPOs for me is mostly gamble. They come during very high bullish markets. They know people will buy anything that is thrown at them blindly, and that's what most people do, and they get stuck because the narrative is the name and the reality is the earning. So if you don't look at the reality, you will be stuck with the narrative. That is the problem. So I would request you to reconsider when you invest in IPOs, because IPOs can really make a mess of your investment. But overall, I am very, very optimistic about the India growth story. I mean, I'm very surprised actually about the strength of the Indian market. I did not expect India to be relatively so strong versus the rest of the world. So I'm not worried about India market based on that. And we have products which have beaten almost all benchmarks in so many years of running. So we would be very, very confident telling you that you can invest in weekend investing products and quickly gain your financial independence over time. Also a day to wish Happy Diwali. Happy Diwali season is coming through, and yes, we are also having a Diwali offer coming out in tomorrow's Daily Byte, my team tells me. So please stay tuned and remain optimistic about Indian markets, and do share this with your friends and family. A lot of these insights, even if you are not going for any weekend investing product, can help somebody in their investment journey. And if somebody gets helped somewhere because of some insight, I mean, that is the most sort of happy thing to be done. If you can share knowledge and that knowledge helps somebody, that is the motive of all these daily bites. So thank you so much for your time, and I'll see you soon in another video. Bye.